Meta just reported their quarterly earnings and the stock is down substantially. I believe at the time of this recording, the stock is down nearly 18% from its all-time highs, which is a pretty drastic move for a stock like Meta. So in this video, I want to talk about what's spooking investors and why the stock is down so much. And then we'll jump into the fundamentals, take a look behind the curtains to try to determine if anything major has really changed with the company and whether or not it's a good buy the dip opportunity. We will look at the key highlights of their most recent earnings report. And then as always, towards the end of the video, we'll take a look at the charts. I'll look at some of the technicals and we'll try to determine where the stock is headed next. Before we get started, all I ask is for one thing, and that's to please like this video. It really helps the channel. And of course, consider subscribing if you enjoy content like this. It's greatly appreciated. With that said, let's get started. Okay, so why is Meta stock down? There's actually two reasons, but here is the main reason why, right? Here's an article that is titled, Meta stock drops 10% as heightened AI spending overshadows strong third quarter results. Okay, so yes, the third quarter results were strong. They were. They're growing revenues. They're growing everything pretty much, right? And, if we read further, we can see that, Mark Zuckerberg, he says here, it's pretty early, but I think we're seeing the returns in the core business, all right? And the key word there is think, right? Like that doesn't give investors too much confidence, right? And then he goes down and says that's what's giving him confidence to make these huge investments. But again, like that's no guaranteed. And investors want to see proof, right? They want to see that, hey, we see the numbers and we see the path of growth, right? You can see here, and this is what really spooked her. Okay, so everything's forward looking, right? And so the market was already expecting Meta to spend $66 billion in CapEx, which is already pretty high, right? Like that's a lot of money, and that keeps growing. And we're going to take a look at the charts and the fundamentals that's going to paint a better picture of everything I'm talking about here. But nonetheless, they raised it to $70 to $72 billion. Like that's a pretty substantial raise, right? And then he's pretty much saying that we think it's just going to get more and more as time goes. That's not what investors want to hear. And so what it really comes down to, investors are like, hey, that's great that, you're growing revenue, EPS is growing, everything's growing, the company's looking great, but your costs to grow those sales are growing just as much, right? Like think about it. Like, and again, when we look at the charts, you'll see this in a better picture, but if revenues are growing like this and CapEx is growing like this, or, cost of sales, then guess what? You're really not growing your net profit, right? You're not growing at all at that point. And then there's an instance where you're spending so much money where, now you're starting to lose money quarter over quarter. And obviously the goal there would be, hey, yes, we're taking a little bit of a loss here, but this investment's going to pay off and you're going to reap the benefits down the road, right? But again, this is all, figuratively speaking. I mean, we don't know, right? I mean, it's just, we're pretty much putting our faith into Mark Zuckerberg to say, hey, okay, I believe you, right? And I mean, hey, he has done a really good job. We got to give him that. So nonetheless, though, that is one of the reasons why you're seeing the stock down so much, right? And I want you to keep this in mind too. So a lot of investors like companies like Meta and other big tech companies because they're not CapEx heavy, right? In other words, it does not take them a lot of money and overhead costs to keep the lights on and keep the business running, right? Like their profit margins are huge. Like they have very little cost. So therefore, the risk of the company are like none, right? Like you're making a ton of money and it doesn't cost you a lot of money to make that money. And so when this happens, right, and this is not just Meta, but Meta obviously has one of the biggest CapEx budgets, but Google, Microsoft, Apple, they're all increasing their CapEx, right? And it's spooking investors for sure. But this is another thing to look at. This is helping companies like NVIDIA and AMD and your TSMs, right? All your semiconductors, right? Because they're building out the data centers and the chips and, they're reaping the benefits of this. So when companies like Meta come out and say, hey, we're increasing our CapEx and we're not expecting that to stop, well, guess what? You shouldn't expect AMD and NVIDIA to stop growing anytime soon either. So besides that, though, the other reason why the stock is down is because they had a one-off charge, and it was a tax charge of I think it was like $18 billion. And again, we're going to jump into the charts to look at that, but that's another reason. And when you look at it, it definitely spooks investors because they're like, oh my God, like it looks like your net income dropped drastically. It looks like your EPS dropped off a cliff. It looks like the company is just going bankrupt, right? Like you're about to go negative on EPS. But again, it was a one-time charge. I just want to point that out. And then the good news is that they're actually, because of the big, beautiful bill, they're going to have more favorable tax brackets moving forward into next year and into the future. So again, we're going to look at those projections as well. And before we jump into the fundamentals, let's just take a quick look at the key financial highlights from their earnings report, right? So we had total revenues growing 26% year over year. Their app ed revenue growing 26% year over year. They had lab revenue 74% year over year. Operating income 40% increase in operating margin, right? That's fantastic. Net income, excluding that one-time charge that I was just talking about, 18.6 billion. EPS, excluding that one-time charge, 7.25. And then we have their CapEx expenditures, 19.4 billion. Free cash flow, 10.6 billion. Their ad impression is also growing, ad growth. And then you have their Reels annual run rate as well, looking very strong. Okay, so before I jump into some of the charts that I put together, I just wanted to show you this. This is from their presentation, all right? And you can see what I'm talking about here. Look at their net income this quarter. Dropped off a cliff. You tell me if that doesn't spook investors. But again, this was a one-time charge. I forgot exactly what it was. I think it was like 16 billion or something like that, because they said that without that they made 18 billion, right? 18.6, I think. But you see what spooked investors, right? And then same thing, right? The diluted earnings per share with that one-time charge dropped to 105. That is huge. But nonetheless, I want you guys to see this, because this is, again, one of the things that spooked investors when earnings came out. Okay, so let's dive a little bit deeper. Here I have the total revenues pulled up, and I'm looking at the annual charts, year over year, just because I'm looking at the bigger picture, right? Like, I'm not day trading Meta. If I'm buying this stock, it's a buy and hold for me, right? And so I want to see, what the potential is. I don't really care what happens quarter over quarter, because again, you can have those one-offs where it looks like they're, not growing profits when in reality they are. And you can see here they clearly are projected to continue to grow. And although these are only projections, this looks like healthy growth. And you can see here, this is one thing to note, their, growth rate, what they're expected to grow revenues at are, projected to decline, but that's normal, right? Companies go through their growth phase where they're growing like this, like 88%, 37%, like 57%, like super growth, right? And then obviously, once you get so big, it's hard to keep growing at that same rate. But when you have revenues in the billions like this, right, and you're still growing at close to 20 a clip, like, wow. I mean, that's a lot of money. Let's not get that twisted. But I thought that was something to keep in mind. It does look like, by 27, they're looking to grow at 13%. I'd like to see if that, stands true or not. Moving on, we have the consolidated net income, okay? So you can see here, we have the consolidated net income before provisions, right? The income taxes, and without. So you can see the difference. This was pretty much what they were netting without that one-time provision, right? And you can see here, I mean, that happens a lot, right? Where you have like these tax charges or something that comes in. It just so happens to be that this one was like, it was bigger than most of them, right? And so with this chart, I did bring up the quarter over quarter just to get a look at, again, the bigger picture where you can see, these one-off charges, they happen often. They're just typically not as big, right? And now look at this. This is huge, right? I mean, that's like, wow. It fell off a cliff, right? Kind of like the stock. But again, this is just nothing to be concerned about. And we're going to get into, how with the big, beautiful bill and their tax rate lowering, like this could increase profits pretty substantially without them having to do anything. All right, so moving on to the next one, we have cash from operation activities and then free cash flow. Looking pretty nice, right? I mean, look at their cash from operations. Wow. Like, this is just their core business. And this is what Mark Zuckerberg is saying, that, hey, I think that these investments that we're doing are paying off with our core operations. That's exactly what he stated. And of course, according to the charts, it looks like it is as well. It looks like the estimate here, though, right? This is what investors aren't liking either. These are the projections. But if we take a look at this, next quarter, the fourth quarter, we're actually looking to stay flat, right? Investors don't want to see that. We want growth. We want growth, right? We don't want companies to be flat, and we don't want a decline, obviously, either. But you can also see what happened in this quarter, right? Back in 21 and 22, we took this dip, and that was like a buy the dip opportunity, right? I doubt it will be this substantial again, but look what happened after that, right? So keep that in mind. It's not always a straight line up, right? There's always downfalls in companies all the time, lawsuits, this and that. And in my opinion, as long as the core business and the company isn't changing, those are buying opportunities. And then obviously you have free cash flow. This is not the prettiest chart, I'm not gonna lie. But again, I mean, part of this is because they're making so many investments as well, right? Like if they weren't making these investments, then what are they doing with the money, right? They're doing like stock buybacks, or they're just holding a ton of cash in the company. So nonetheless, they have a lot of free cash flow, but this seems lower just because they are making so many investments. All right, so moving on, we have a few things here. But here in the blue, we have projections on going 2 years into the future. That's the operating profit. Look at that. Expected to increase. Again, we have this decline here, though, which, I'm sure that's not something investors want to see. I'd be curious to see if that actually happens, though, because if they come out and beat this estimate, I would expect the stock to go up substantially. Vice versa, obviously, if it, is even worse, then it could go down more possibly. But nonetheless, not a bad projection here. Obviously, we have these dips sometimes. It's not always a straight line up, like I said. And then you have the operating margins here. 43%, looking good. It's about their average. And then look at this, gross profit margins. This is what I was saying, how profitable these companies are. 82%. I mean, it's always been this. I mean, think about that. That's like selling alcohol. I mean, I used to work at a bar, right? And I would order alcohol. And so obviously I'm seeing the cost of it, right? And we'll spend like 60 cents on a beer can and we're selling it for 4 or 5. Like the markup on that is so substantial. And I don't know, that's just kind of what this reminds me of. It's insane. Like it's like almost robbery. But this is why people love these business models. But again, there's not a lot of cost and it's all profit. I mean, why would you not? Right? So again, I mean, this looks good, right? And that there's no change in that really. If anything, we're kind of on a trend up, right? And then with AI, I don't know. I mean, you obviously it could be bad for some employees, but AI starts doing a lot of the work for them. That could only increase profit margins as well. But again, how much higher can it really go? We were at 86. I guess it could go a little bit higher. Nonetheless, looking good. Moving on. Cost of sales, right? We talked about this. All right. So, I mean, this chart is not what you think, right? This is not what you want to see with cost of sales, right? We don't want to see this huge increase in cost of sales, right? I mean, you can see like, these small increases here. And I mean, this year they hardly paid anything extra, right? But grew revenues just as much. And then we had a big jump here, and it's jumping even more. And obviously, Mark Zuckerberg said that he expects it to keep going up, right? Not what we want to see. And I mean, keep this in mind. Like this, it's normal for this to go up, right? Like it takes money to make money, right? But we don't want to see this growing as fast as revenue, right? That's the biggest thing. That's the concern. Moving on. Again, we have the CapEx, right? Look at this. This is what they're spending this year, right? And then next year they were expected to go to 66 million. But look at this though. This is the issue though, right? I mean, look at their CapEx, right? I mean, with 31 went down, then back up, and then this was a huge increase just recently. And then he comes out with guidance saying it's going to be even more. We were going to do 66 billion, right? Now it's going to be up to 72 billion. Like an extra 10 billion. Like that's huge. Like, come on, man. Again, this is what investors are not liking right now. It's like, wow, Mark, like, do you know what you're spending your money on? Like, you're getting a little too crazy now, right? Like, this is slow it down a little bit. Like, chill on the investments. And again, this is why the stock's down. That chart almost paints a perfect picture. And then here's just R&D, right? Again, like cost to, put into research and development. Also seeing pretty substantial increases. So between the cost of sales, the R&D, the CapEx, right? Like just spending a lot of money, right? They're making a lot of money, but if you're spending it all, then you're not netting it, right? Like that's the biggest thing. We want to see the EPS growing, the earnings per share. It's what, is making us money. All right, this was an interesting chart. So that was more bad news, right? That was another reason. That was when I said, I'm going to show you some charts that's going to paint a perfect picture of why the stock is down. Some of those charts I showed you were it. This is the next cool thing though, right? You can see here, this is our tax rate right now, okay? 30%. Expected to drop to 11.9. That is huge. I mean, just think about that, right? When you're making billions and billions of dollars and you drop their tax rate almost by 20%, I mean, that goes straight to the bottom line, does it not? And again, they're expecting this to stay that low. So the big beautiful bill came out, and it was, the taxes were favorable for big corporations pretty much, right? Trump's a big business guy. But again, this was pretty interesting. They actually, drew this out in the earnings call as well and mentioned it. And I think this had something to do with that one-off charge that they kind of had to pay before they get this benefit. But don't mark my words on that. I'm not 100% sure. Nonetheless, this is great news, though, and something to be bullish about. All right, so now for the fun part, let's go ahead and hop into the charts. And I'm looking at this now, and Metastock is still down. I mean, it's down another 3% today, so it continues to go. And I'm not going to lie, I'll cut to the chase. I continue to buy the dip on this stock because, yes, I do think that this is a little overblown, and I think it's a good buying opportunity. But again, let's look at the charts and see why I feel that way. All right, so this is the daily pulled up right here. You can see that we've just pretty much been on a steady decline. This is the 4-hour chart. All right, you can see here where we were getting close to all-time highs before the big drop on earnings, right? And we are getting close to some support as we speak. So let's see, this was obviously the first level of support. You can see here where the dip got bought up a bunch, even some wicks down here, they got bought up. But nonetheless, it just didn't even bounce at all, and it's continuing off. And you know what? It is what it is. I'm not going to lie. Like, my position's not the best on this, but I'm going to keep averaging down. It is what it is. Like, this feels like a gift to me. Not many times do you get a stock like Meta, right? One of the big techs that sells off this much that you can buy the dip on. Unless there's like a market crash, obviously, but that's just a whole different scenario. Okay, let's zoom out just a little bit more, okay? This is where it gets really interesting, okay? So I'm keeping these technicals pretty simple. But let's look at the RSI, right? RSI oversold on the daily, right? Look at this. I mean, history tends to repeat itself. It doesn't have to. Any time that the RSI has gotten oversold to this level, look how substantial the bounces are. I mean, it's almost straight back up. And we very rarely go this low, right? And then let's see, looking at the MACD, yeah, it looks like we're starting to curl over here, right? We got that green coming up. So that looks good. Okay, so zooming out, this is, I'm going to keep things super simple on this one, because again, this isn't really like a day trade. This is more like a long-term trade. So I want to look at bigger time frames. And I'm sorry, but you just tell me, besides back here in this huge slump when the stock was $87, I actually remember buying the stock down here. I sold for small gains. And look at this, man. Like, holy smokes. I mean, there was just, you couldn't never buy the dip because it never dipped. I mean, let's get real. We never broke the 200-day moving average, this yellow line, ever. We hardly even touch it. Right, but we get close to it here, we get close, and okay, this is our exception, but this was Liberation Day. The whole entire market was selling off at this point, right? I mean, that was unprecedented, I guess. But nonetheless, yes, we dipped below the 300-day in that scenario, and then ripped right back up to all-time highs, right? And then so here, we dropped to the 200-day moving average, and I believe this is where I started accumulating some shares, because, again, we never typically really go below the 200-day moving average. So now we're approaching the 300-day moving average, which was also where I had this line drawn, right, where it's just a major support. You can see where this was resistance before. We couldn't break above. Actually got rejected pretty hard off that level before we got back up to it, right? And you can see when we broke that level, it was a big break, right? Same thing. When we broke the level down here, it fell straight down. And then we came back up, we consolidated around that level. So that's my next level of support, right? And then if things get even more sour, then this is probably the next level we're looking at, right? So the question is, right, where's Metastock headed? Well, in my opinion, I think it has a lot to do with where the market's headed, right? If for some reason the market decides that it's going to, sell off, then I don't know, this could get pretty ugly. I'm not going to lie. But in that scenario, I'm personally, and this is not financial advice, please do not copy my trades, and then I'll hear it in the comments or whatnot saying, oh my God, like you told me to buy the dip and I'm down, this and that. You got to wait it out. It's, a part of this is like psychology behind trading, right? And that's the thing. People will buy the dip on stocks and they'll be down right away. And, then they'll end up selling out for a loss right before the stock just takes off, right? And that's what these big money investors want, right? They want to scare all the retailers out. And then, once they sell off the stock even more, it does like a quick liquidity grab, right? And then that's when the investors come in and they buy up the dip, and then the stock just rocket ships back up without you, right? And you just wait for it to dip again and it never dips. Because you can see once this stock goes bullish again, it's just never really falls below these averages, right? But nonetheless, this is my thing, right? Anytime a big tech company gets to the 200-day moving average, I think it's a buy, right? And then my next buy level would be the 300-day moving average on the daily. Because, I mean, look, we're going back to a lot of data. I mean, back since 2023, this stock has never dropped below those levels. And again, this is kind of the year one off. And then if we zoom out even more, again, we are right at that moving average on the higher time frame as well, right? This is a weekly time frame. And then just out of curiosity, I drew a trend line here, and this is not like anything crazy, right? And you can see this is typically how it works. The trend lines typically line up with one of the moving averages, and you can see that, right? I didn't even know it was going to happen. But look, it's right there. And okay, yes, like you can argue that, I could make the trend down here. But I want to go where most of the price action is, right? And you can see here, we had a lot of price action right before this rally started, and we dipped down, right, close to this moving average, right? And, here we had a lot of price action as well. But nonetheless, I mean, this is not like a for sure thing at all. But in my opinion, we're getting, when you just look at this chart, right? If this trend is going to continue up, and we're probably about to bounce here, in my opinion. And don't be surprised, honestly, if we just get a dead cat bounce, right? Which is when a stock like this sells off, and it's going to get to a point where it's going to bounce, right? And it could bounce all the way back up to here, and then sell off more, right? I mean, that could happen. But if I had to guess where this stock is headed next, just based off of the technicals, right? If we make it, I would not be surprised if we get down to this line that I have drawn here, close to 637. Wouldn't be surprised. $10, it's like another 1% or so. I would not be surprised again. We could go even a little bit lower. 630. I don't know. Let's say this. This is probably my worst case scenario, is that we come down and fill this gap at 609, around a $600 range. I think that's the worst case scenario. Okay, so I'm saying this if you're like looking at what the risk to reward is. So that's another 5-6%. That's worst case scenario, okay? Best case scenario, we bounce right off of this trend line or that 300-day moving average, which again, you got to remember, like that's a very respected line, okay? Like that is, these moving averages are here for a reason. I mean, this is very rarely does a stock, again, ever get down to these levels. So that would be best case scenario, right? Is that we're close to bottoming out right now, and we're going to bounce soon. And I think it has a lot to do with the market. And it just takes time for investors to let all this information settle in and to digest it. To let some of the people that have fear, let the selling pressure happen. Get all the paper hands out, right? So the real people can get in and ride the wave back up. But again, worst case scenario though would be coming down to this level right here. Okay, I would say see this gap right here. I would say we come out. We probably wouldn't go that far. I say we probably fill the gap right. Around $600, I would say, would be worst case. And that's like a psychological level as well, right? $600, but $650 kind of is too, and we kind of broke that already. But again, sometimes you see a little dip below those psychological levels just to be like, oh no, it's going lower, it's going to 600 before it goes higher. But nonetheless, it's still an upward trend, right? This stock is still bullish. That has not changed. The daily RSI is oversold. The MACD is curling over. We're oversold on the 4-hour. We're oversold on the hour. We're oversold on just about every damn time frame there is. We're almost even oversold on the weekly time frame. And check this out. The only time that's happened, that huge crash right down to $82 that we were just talking about. And then Liberation Day was the last time that the stock was almost that oversold on the weekly. I'm sorry. In my opinion, there's at least a bounce coming here soon, even if it's a dead cat bounce. But nonetheless, these are the levels that I'm looking at. Again, if we're going to go higher, right? So those are the levels if we go lower. If we're going higher, I think we could easily bounce back up to this moving average right here. So about a 10% gain. So, I mean, even if you looked at it that way, right? You got 5% to the low, 10% to the high. I mean, the risk to the reward of this, in my opinion, right now is just too good. And if you dollar cost average, that would be my recommendation. Don't go all in right away. Let's say hey, I'm willing to allocate $50,000 to Meta, right? do like 10K. Just throw it in, right? 10K, keeps dipping, do like another couple thousand, just keep buying, right? Keep buying as it keeps dipping. Every time it dips like 1 or 2%, buy more, right? Or honestly, sometimes it's better just to wait for key levels. You know, like, hey, if it dips, I'll buy some here, right? And then if it dips down to this level, I'll buy more. And then if we fill this gap, I'll buy more, right? That's one way to look at it. But nonetheless, you know, I bought the dip on an earnings like this before with Meta, and I got scared. I got too big. I bought too much at once. I was down a good bit. Granted, the stock, I think, bounced back up the next day and then just continued higher. I took like a small profit on it, and I beat myself up on it so much. And I told myself that if Meta ever has a drop like that again, I'm buying the dip, no questions asked. Arguably, I probably bought it a little too fast. Again, I started accumulating probably right around here. But nonetheless, again, I'm going to keep buying. And at the end of the day, you know, let's look at some of these price targets. 616 is the low on the street. That's worst case scenario, bearish, right? We're there almost now. All right, and then your mid price 848. I don't see why this stock can't hit 1,000. You know, if let's say the market stays bullish, I don't see why I can't hit 1,000 close to end of year. In my opinion, that's all that is, though, right? Actually, maybe not towards the end of the year because it's probably at this point going to take another earnings report. I could see us working back up to here, close to all-time highs, right around, right, getting to that area around earnings. And then as long as earnings kills it, then I could see us shooting higher to make all-time highs. That's just my opinion, though. Again, and that's just looking at price action. And, you know, this is one thing that I've realized, and I'm going to wrap this video up. You get these levels, right, where it's like, oh, my God, the stock's going to break out. Like, it's going to break, right? Or it's going to break down or up, right? Either way. And it's always like a big news event that typically sends it, right? Like a catalyst. It could be earnings. It could just be a news drop, whatever it is. But it always works that way. Like a stock will work to a level, you're like, oh, my God, it's going to break out. It's going to break out. And then it just so happens that the company comes out with this great news right around that same time, and that causes the breakout, right? And it's just weird how that works. And again, I think a lot of this is just like psychology behind stocks. That's all I have for you guys in this one. I hope you found this video helpful. If you're still here, please, again, consider subscribing to the channel and liking this video. It really, really helps me grow the channel and get it out there to other people. Again, I'm trying to help, you know, everyone become more financially educated as best that I can. But that's all for this one. Happy Halloween, by the way, and I'll see you in the next one.